So the topics covered under this are, we'll be learning about the business accounting. Under business accounting, we will be learning about the financial accounting. What is financial accounting? Then we will learn or we will discuss about inventory management. These are the topics we will cover under business accounting. Next, under steps of accounting, we will be learning the methods of accounting. That is, how can we maintain accounts? What are the methods available? So there are two methods. One is the manual method, other one is the system method. We will learn those things in this particular topic. Then we will learn about the classification of accounts, and then the golden rules of debit and credit. That is, which account we have to debit, which we have to credit, that particular rules of debit and credit, that is the golden rules of debit and credit, we will be learning or we will be discussing. Next, we will learn some important terms like assets, liabilities. Then we will learn about the golden rules of accounting. Then we will learn about journal entry. Then the ledger, the general ledger. Then we will also learn about or we will discuss about trial balance. Next, we will discuss about the final accounts. That is, we will be learning about the profit and loss account and the balance sheet. We will discuss about these 2 points. So to begin, first the topic, what is actually accounting? See, a systematic manner of recording the business transaction, that is whatever is happening in our business in a systematic manner when we start recording, that is roughly called as accounting. So before we could discuss what is accounting and when we acquire the depth knowledge of accounting, before that let us have some basic concepts, let us discuss about it. So the first thing is, who is actually known as the father of accounting? Luca Palio is the person generally called or known as the father of accounting. So he actually was the person first to publish a material or a concept to maintain accounts in the double entry system. So this particular person only is called as the father of accounting. So he is mainly responsible. He only, in a material wise, how accounts has to be maintained in the double entry system, he only is the person who invented or published the concept. Okay, so he is actually an Italian mathematician. Similarly, we also have a father of accounting in India. So in India, the father of accounting was actually Sri Kalyan Subramani Iyer. So he is the person responsible for the professional accountancy, whatever we are following in India. He is the person responsible for it. His name is Sri Kalyan Subramania Iyer. So his time period was 1859 to 1940. So this person is actually known as the father of India's accountancy profession. Next. Now we will discuss about business accounting. So the business accounting actually is categorized into two categories. One is called as the financial accounting. The other one is known as the inventory management. So related to the money transactions, debit, credit, everything, we take care of all those things under financial accounting. Whereas the stock, what are the stock goods present with us, how much we sold, how much is damaged, how much has to be sent outward, how much inwards the goods has to come, all those maintaining the records or maintaining the stock details is actually called as inventory management. Let us continue. Financial accounting. What is financial accounting? See, the art or the process, we can say that it is an art of recording day-to-day business transactions in a significant manner, that is by classifying, summarizing all these in terms of money and transactions. These are called as actually the financial accounting. In simple words, we can say that recording of day-to-day business transactions in a systematic manner is called as accounting. This is a very simple way. Okay, let us continue detailedly. See the different steps involved in accounting. That is, if you want to maintain accounts of a company, these are the steps involved. What are these steps? Let us discuss. See, the first step is recording. Whatever is happening in our business, we have to record that. We have to keep record of what is happening in that business. See, the transaction is actually what any event which is happening with the, or which is happening in terms of money is actually called as transaction. So recording of those transactions first is the important point or step. Next is we have to classify, that is before actually recording also we have to classify, that is this type of transaction in which particular account we have to maintain. That is actually called as classifying. Whenever we start a business and when we want to start maintaining the accounts, the first step what we are supposed to do is our accounts, what are the account types is we are going to involve with. That particular thing we have to identify. After identifying, first we have to classify all the account types. Then after classifying the account types, whatever the transactions or the events happening in the business, that has to be recorded. Then after recording this over a period of time, then we summarize it. That is, if we maintain accounts for a period of an year, that is starting financial year, every financial year starts from 1st April of an year and ends by 31st March of an year. So this is one financial period. So during this financial period, whatever we have recorded, this we summarize either quarter yearly or half yearly or the full financial accounting year period. After summarizing this, then we interpret this financial events. That is, what we do is first we prepare a trial balance. After summarizing all these accounts and applying various formulas, we first prepare a trial balance. After preparing the trial balance, then the financial statements of accounts has to be prepared. Financial statements of accounts. So which are the financial statements of accounts? Yes, you are right, students. The financial statements of accounts are, one is profit and loss account, that is P and L statement. The other one is the balance sheet. So these two can be prepared only after preparing the trial balance with help of other formulas and the rules which we are supposed to maintain to prepare the financial statements of accounts. Then after preparing all these, using this information, we can decide whether our business has been successful, whether we are able to gain profit, were we in loss, what else can be done in order to improve the business to gain more profit. So all these discussions and decision making will be easy only when we have the financial statements of accounts, that is profit and loss account and balance sheet. Let us continue. So here you can notice in this particular diagram, this diagram is actually called as the accounting cycle. I have given this representation graphically so that it makes easy for you to understand what all are the steps or what all are the process involved in accounts. So the accounting cycle, first step is we have to gather, we have to find out the information. That is, we need to find the information that is related to accounts, what all are the types of accounts we are going to have, and what all are the bills and vouchers, whatever we are having, all these things we have to gather. So based on this, what do? We classify the accounts. Classify accounts. After classifying the accounts, after preparing the required accounts book, okay, what are the accounts book I will detailedly explain you, but you try to understand. Account books has to be prepared. Then using the account books, the transactions will be recorded. So everything which involves money, those transactions are all recorded. After recording these, then they are posted in as journal entries. See, in the books of accounts, there are three books of accounts. One is called as the cash or bank book. The other one is called as the journal book. And finally, we have the ledger. So, regarding this detailedly, in the coming classes, I will explain you. As of now, you try to understand that once the transactions are recorded, then they are posted in the journal entries. And after they are posted, then they are summarized and the trial balance is prepared. So once the trial balance is prepared, if required, reconciliation of accounts are done. That is, whether the accounts are correct or whether the money are reflected correctly, reconciliation has to be done. So more often the banking accounts are all reconciled, because the bank book which we maintain and the accounts which the bank maintains are totally different. So in order to synchronize or make the transaction reflect correctly according to us and to the bank, we are supposed to reconcile the bank accounts. Then after this, then we have to make the post adjustments, that is the adjustments whether in the journal entries whatever we have passed, you have to check and make the necessary changes. And once that is done, then we will be preparing the financial statements or the financial reports, that is profit and loss account and balance sheet. So once the profit and loss account is prepared, this is the financial or the final statements of accounts. We generally call it as financial statements of accounts. We can also call it as final statements of accounts. So which two are the statements? One is balance sheet, the other one is the profit and P&L statement, that is profit and loss account statement. So once they are prepared, then we get an idea how our business has successfully gone through, or any necessary changes has to be done further to avoid the losses and make progress towards the profit. Then finally, all these account which we had maintained has to be closed. The books has to be closed so that the next financial year begins. And the same process will continue further. This is a cycle. The steps will one after the other will be flowing in the cycle. This is only known as the financial or the accounting cycle. Okay. So let us continue, students. So in general, let us try to understand what is accounting. So accounting is nothing but recording of the transactions. Then comes the questions, what is transaction? See, transaction is nothing but it is an event. Okay. So event which actually gives us the financial position of our business. Because of an event, if there is a change monetary wise, then that is considered as transaction. Monetary means money. In terms of money, if there is a change, then that event actually leads or is called as a transaction. That is, whether it is making changes expenditure wise or income wise or owning or the money terms wise, then that is actually considered as a transaction. So the event which makes effect or which leaves an impact on profit and loss of the business, then that is actually considered as a transaction. Let us continue. So transactions, we can say that they are of two types. Okay. So the two types of transactions are, one is the cash transaction. So cash transaction means the payment which we received immediately in terms of cash. So those are considered as the cash transactions. Credit are nothing but the payment which we are going to receive after some time period after the transaction. That is, on credit some person has purchased some goods from our company. So the payment of that we will receive in the coming days or coming period. So that is why it is treated as the credit transactions. The next point of discussion is methods of accounting. How exactly can we maintain accounts? See, we discussed what is accounting. So accounting is nothing but recording of day-to-day business transactions in a systematic manner, which involves these steps, that is classifying of accounts, recording of transactions, summarizing, then preparing the financial statements of accounts. Once the financial statements of accounts is prepared, then we will discuss or we will take the financial decisions, what has to be made, what adjustment has to be made for our further improvement in the business. So this accounting actually involves two methods. One is called as the manual method. So accounts can be maintained in the manual method, that is using the books and the accounting knowledge. Manually we can maintain accounts. So the second method is using a computer system. So that is called as the system method. Say for example, using softwares like Tally, SAP or Excel also can be used to maintain the accounts. Tally is one such popular software which helps us to maintain accounts. So that is actually an example of system method of accounting. In manual method, as I said you earlier, manually it is maintained, and the person who maintains these accounts is actually called as an accountant. So accountant maintains the accounts for a period of 12 months or 1 year. That is also called as financial year. What it is called as? It is also called as financial period or financial year. So when is the financial period? It actually starts 1st April of an year, okay, and it continues and it ends by 31st March of the next year. For example, suppose we are in 2023. So this would end when? 31st March 2024. This is actually the financial period. Suppose if the year is 2024, then 1st April 2024 it will start and it will end by 31st March 2025. This is actually the financial year. So over this financial year, the accountant makes use of these books of accounts, that is called as the cash or bank book, journal book and the ledger, and maintains the accounts. So for one financial period, he will maintain the accounts. Once that is maintained, next the accounts of these accounting books will be summarized, and out of the summary trial balance will be prepared, and after preparing the trial balance using various accounting formulas, rules and methods and accounting concepts, next profit and loss account statement and the balance sheet will be prepared. So using the profit and loss account statement and the balance sheet, a person can know what is the financial status of a business or in what position we are standing in our business. So using that, they make the necessary changes so that the next financial year they will be able to gain more profit and less towards the loss. Let's continue. These are the 3 books of accounts. All cash transactions actually are recorded into the cash book. So where are they recorded? They are recorded in the cash or the bank book. Then all non-cash transactions are recorded into the ledger book. Then finally, both the entries of the cash or bank book and the journal book, final entry is again made into the ledger book. So what does ledger contains? It contains both the posts, that is cash or bank book transactions, as well as the non-cash, that is the journal book transactions also in it. So these are the books of accounts. Let us continue. As I said you, cash or bank book is used to record all transactions, that is all cash transactions, and the journal book is actually used to record all the non-cash transactions. Again, both the entries, that is cash or bank book and the journal book, both these transactions are recorded into the general ledger. So this is how it goes. Let us continue. So as I said you earlier itself, I had explained you, these accounts will be maintained for a period of 12 months. That is, it starts from 1st April of an year and ends by 31st March of the next year. So after this is maintained using the various accounting formulas, rules, regulations, it is summarized, and then first what we generate is actually called as the trial balance. Once the trial balance is prepared, again applying various accounting formulas and rules, the financial statements of accounts, that is the final statements of accounts or the financial statements of accounts, that is balance sheet and the profit and loss account is prepared. So profit and loss account and the balance sheet is prepared. So this gives a clear picture of our business.